Hello, this is the trade site Forex Market Preview and International Economic Data Roadmap for the week beginning Sunday, June 2nd, 2013. We're entering June and ending next Friday, the 7th of June. Here's a look at the dollar index, daily chart. Not much new here. We did have a little bit of movement a couple weeks ago. So last week was good for trading, though. The ranges have been better overall, I would say. But in terms of any place specific on the dollar index, we're not really anywhere technically important. We are still near the highs of the last 6 months. That's about all you can say there. I did want to post the euro dollar. This is the daily chart of the euro dollar, starting to move back up. Again, between the red and green existing static trend lines there, so nothing too specific to report. It's kind of in no man's land. There's no patterns. There's no 13 Comer or Seeker buyer-sell signals looming. Here's the pound dollar, also between a key static trend line on the downside, this red line down here, and the green line up here is the another static trend line. So we're kind of stuck between those two. I just want to point out, though, here's the Aussie dollar. When you look at this with our Seeker tool, you'll see that it's had kind of an extended move to the downside. And if I take the chart and add our Comer study instead of the Seeker, we are now 12 bars down towards a Seeker buy signal. Remember, 13 will be a buy signal. A new low and close will give us that signal here on the Aussie. It's the only pair I see out there that actually has a potential looming signal out there. So we'll be watching that in the days ahead, probably not weeks ahead. I would imagine it will come into play next week. Now here's some intraday data so we get an idea of what the ranges have been like. This is always important. Here's the euro dollar in 60-minute bars. So it's the last week. Keep in mind, the euro, we like to see the euro trade about 130 pips a day on average. Obviously it was way less last year at the back end of the year. We've been kind of climbing back up slowly here with our averages. For example, the current 6-month average on the euro at this time is 103 pips. But the average had gotten down to like 80. So it's definitely climbing back up. We're seeing a lot of days at 120 or better. What's frustrating about a week like this, though, is, obviously it's a slow day with the holiday back on Monday. But, this whole week's range only covers about 210, 220 pips. That's not exactly huge range. So we'd obviously like to see more range coming out of the pairs and more consistent movement so we can hold trades day to day. By the way, we're reporting our results for May, 395 pips of net gains, including all entry and exits, partials and final stops and everything, which is a pretty good month, considering there wasn't necessarily a ton of movement in the dollar index itself. But that's a function of the ranges getting better as well. You either need the ranges up, or you need some consistent directional movement, or both, to really have those good months. So I'd say the Forex market's definitely been vastly improved so far in 2013 than it was in later 2012, which is what we had predicted. Here's the pound, 220 pips for the entire week as well. So not exactly huge ranges. Obviously if you're doing 130 pips in a day and you start heading in one direction, you could see 500 pips of range in a week. And those are the weeks where you're going to make, obviously, your biggest money. So with that being said, as usual, let's take a look at the economic data that's coming out this week and see what we need to be aware of and maybe trade around if necessary. Bernanke speaking on Sunday, not a big deal. We got a bank holiday out of New Zealand going into Monday. Capital spending out of Japan. Retail sales out of Australia on the Sunday night going into Monday. And then on Monday here in the U.S., Halifax HPI out of the UK, Spanish manufacturing PMI, Italian manufacturing PMI, all of Europe's final manufacturing PMI, and the UK's manufacturing PMI. And amazingly, US reporting the same data, manufacturing PMI and ISM services manufacturing number, and construction spending at 10 a.m. Eastern Time here in the US. None of that data is huge for Forex. Japan's got their monetary base in the evening. Current account out of Australia. Average cash earnings out of Japan. 10-year bond auction out of Japan. Got a rate announcement going into Tuesday on the out of the Bank of Australia. Spanish unemployment change. Construction PMI out of the UK. PPI out of Europe. Trade balance out of Canada and the US. That's one of our big three each month. the trade balance data out of the U.S., so we'll be half size ahead of that number. We've got AIG Services Index out of Australia, GDP out of Australia Tuesday night here in the U.S. All the final services PMI data, not the manufacturing stuff, out of Spain, Italy, broad Europe, and the UK. And retail sales and revised GDP for Q1 for Europe at 5 a.m. Eastern Time Wednesday morning. We've got revised non-farm payroll productivity and unit labor costs here in the U.S. On Wednesday, we've got the ISM services, factory orders, crude oil inventories, and then in the afternoon, the beige book trade balance out of Australia Wednesday night. Thursday, the CPI out of Switzerland, 10-year bond auction out of Spain and France, rate announcement out of the Bank of England and out of the ECB, unemployment claims, the weekly data out of the U.S., natural gas, AIG construction index, then leading indicators in Japan, Friday at 1 a.m. Eastern Time, trade balance out of Germany, France, overnight going into Friday here in the U.S., consumer inflation expectations and trade balance out of the U.K., and then in the U.S. and Canada, Canada's got unemployment data, labor productivity, and the U.S. has the same, our unemployment data and non-farm payroll data, and then consumer credit in the afternoon on Friday, with China releasing their trade balance and CPI, PPI over the weekend. Keep in mind that the unemployment rate with the NFP data here in the U.S. is another one of our big three each month, so we've got two of them this week, and a lot of rate announcements, Australia, the UK, and ECB, Europe. So we've got two half-size nights going into the trade balance data and going into Friday's unemployment data. A lot more data this week globally than what we saw last week. Maybe that'll move the market, but you've got to be a little cautious when you've got some of those bigger numbers coming out. Not a time to play full size and risk heavy funds in your account. We will be trading it as usual every night, making calls, and we'll be in the lab to help you out. Hope to see you there. As usual, these charts are brought to you by eSignal.